Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. Hope you're all doing well, enjoying your Saturday. I hope you had a nice week. Markets were a little bit rough. It had me looking into some things and having some long conversations with my brother. I actually even delved into what the Dow 30 was 20 years ago, and even the top 20 S&P 500 stocks, both 20 years ago and 40 years ago, to kind of decide what I wanted to do. And I'm actually going to talk about why I think owning the SPYs and the QQQs is almost like cheating, and an avenue I'm seriously considering going down with some of my set it and forget it stocks for a lot of reasons. So I hope you enjoy the video. It should be really interesting. I'm going to get into a lot of topics. I have a lot of things on my mind. Now, before I get into some of the things that I've been thinking about for this week and wanted to talk about, if you guys could do me a favor, because it really helps the channel, which is hit that subscribe button. Also hit that like button if you're enjoying the content. It really does help the channel, and I appreciate the support. I love that I've seen it grow so much, so thank you guys. But let's talk about the stock market. We're also going to get into the real estate market at the end as well. But keep in mind, when I talk about real estate, it is super localized, because nationally versus where you live is going to be completely different things. So we've had a little bit, and I mean really a little bit, of a stock market correction the past few weeks as we're getting closer to the Fed conversation that's coming up in a few weeks. And as we're getting closer to the election, I think we're going to see a lot of volatility, and you're going to have some corrections over this time. And I think you may even have some good opportunity to buy some things. Now, one of the things I had a really long conversation with my brother about was the thought process of buying and owning forever, which, as you guys know, is like a general strategy of how I believe and what I want to do. But the interesting thing is that when we got into it and started talking about it, we actually started looking back at the history of the top stocks over 20 years, 40 years. I think we even looked at 30 and 50, and just started a long conversation about what really goes on over these extended time frames and how much those top stocks really change. And recognizing that as a human, it's very hard to really be able to tell what stock is going to be around in 20 years, if they're still going to be the top in the industry, and how long those top companies stay around. Now, I do think you're able to make these decisions and see it for a good 10, 15-year period. But when you look out 30 or 40 years, you start to notice that the top companies really do rotate. And there's even a change in industry if you look at it to some degree. Because when I looked at like the 1980s, it was super heavy in oil and gas and automobiles and things like that. The same way that right now we're super heavy in tech companies. It's very hard for me to get outside of that realm of thinking. So even myself included, it's very hard to picture like what companies are going to really be around in 30 or 40 years as the top producing companies. Amazon is probably my overall number one pick. Now, keep in mind, when I do these videos, as always, this is not financial advice. You need to do your own research. I hate to be overly sensitive to that stuff, but really, I don't want anybody taking the decisions that I make or going off of the things that I say to go make their own choices in their portfolio. You need to do that on your own and what you decide for you, and talk to a financial advisor or whatever you need to do. But for me, Amazon is my top pick. Like, I think they're a great company. It's very hard for me to envision how they're not still one of the top companies in 20 or 30 or 40 years. At the same time, I have to be realistic when I go back and I look at what the top companies were in 2004 and around 1980 as well, and recognize that those are no longer the top companies. Now, some of them are still around, some of them are still in the top 20, and some of them are still doing just fine, but some don't even exist anymore. So it really changes. And when you think about it, if you can move yourself back in those timelines and think about those companies and what they were when they were around and what you were thinking of them at those times and everything else, they really were the best of the best, and it changed. Now, this is what brings me to feeling like investing in the SPY and the QQQ is almost like cheating. Because what happens is the top companies change, those funds change, and it's constantly rotating to keep the best companies in there. Now, keep in mind, you do also get the lowest 50 or 100 companies that you don't really want to own either. But as a company like Nvidia has risen from where they are to being one of the top companies in the S&P 500, you've had them all along and consistently owned more of it as it become a bigger portion of the S&P 500. Same with when any small company becomes bigger and starts getting into that realm. And as they grow, you own more and more of it. So you're always going to own the best of the best. And you're never going to own the ones after they become too small to qualify for the S&P 500 fund, because same in the other direction, as they start losing value, you're going to own less and less of it over time, and you're constantly going to own the top 500 stocks. Now, the QQQs work the same way for the NASDAQ companies. In some ways, I'm thinking these are great investments because it's a good way to cheat and always own the best companies. And part of the discussion as I'm getting older, and I don't think I'm that old yet, but I do worry about, whatever happens, and if you get hit by a bus and anything else, when something happens and it passes on to my family, if it's in something like SPY and QQQ, they shouldn't even need to think about it because they own a great portfolio. Whereas if I pick individual stocks and they think dad knew or my husband knew, so I'll just leave it that way, as things transition in those companies and maybe they should be making changes, but they're not because they don't really pay attention, they're kind of owning the same things forever versus owning a compilation of the top 500 stocks in the case of the S&Ps or the QQQs, the whoops, excuse me, I almost dropped my little this starts and stops the camera. Anyway, a little divulging. But and same with the QQQs, that they own the top companies in the Qs, so they have the NASDAQ stocks as well, and they don't really need to pay much more attention than that because they're invested properly. At least the S&Ps and the QQQs are pretty straightforward about that. The Dow and the index and how it generates what its value is completely misleading because the Dow 30 stocks do change, and the way that they're weighted doesn't even make sense for pricing what the Dow's at, but myself included, we're constantly using the Dow as an evaluation of how the market's doing. So I'll start by rattling off the Dow 30 stocks that are currently the ones in place, and then the ones from 1982. Now, it doesn't change every year, so I picked 1982 because that was the closest to 1984 to give a 40-year history, but here we go. So currently, 3M, Dow, D-O-W, Dow, Microsoft, Amazon, Goldman Sachs, Nike, Amex, Home Depot, Procter & Gamble, Amgen, Honeywell, CRM or Salesforce, Apple, Intel, Travelers Group, Boeing, IBM, United Health Group, Caterpillar, Johnson & Johnson, Verizon, Chevron, JP Morgan, Visa, Cisco, McDonald's, Walmart, Coca-Cola, Merck, and Disney are the Dow 30 stocks. So makes sense, all good companies in my personal opinion. Maybe you want to own them, maybe you don't, so on. But we go back to 1982. You have Allied Chemical, General Electric, which is not the General Electric that you see on your ticker screen now. It was a different company that's reformatted. And I'm not sure if your stock went to zero but it's not the same as it is in the current GE quotes that you see. Owens, Illinois, Aluminum Company of America, General Foods, Procter & Gamble, which is still there, American Can Company, General Motors, Sears, Amex, which I think, was one of the ones today as well, Goodyear Tire, Standard Oil, AT&T, Inco, Texaco, American Tobacco, IBM, Union Carbide, Bethlehem Steel, International Harvest Company, United States Steel, DuPont, International Paper, United Technologies, Eastman Kodak, which was actually one of the companies that I told you I bought when I had received a little bit of money, so I can tell you personally it is no longer in existence, which I think you all know. Did pay a decent dividend for a little while, though. Merck, Westinghouse Electric, ExxonMobil, Minnesota Mining, and Woolworths. So at least I found it pretty interesting that if you had those companies over the 40 years, you may or may not have done so well, and you probably did essentially what I did in the example that I gave of what I bought when I was in high school, where a lot of things went out of business, but the ones that did do well did extremely well and kind of performed overall what the market pretty much performs. I crushed it in McDonald's, but I did really poorly in the other ones I picked. But the average still made out to be about what the average in the stock market is. And I'm guessing if you own the Dow, perhaps if I sat there and did it out over the timeline over the last 40 years, that the companies that have grown enough to have performed well enough so that you're still getting a 7 or 8% return over those companies. What's interesting to me about it is it's supposed to be some of the best companies, the same way that I look at Amazon and Google and Meta and the companies like that. And I kind of wonder in 40 years what those companies will still be. Will they still be top in the markets? I mean, you tell me what you think. Do you think we're all just better off buying the SPYs and the QQQs and not paying attention? Or do you think we're better off being in the Amazons and Googles and trying to outperform? Be curious in the comments. So feel free to, make a comment. Let me know what you guys think about that stuff. Now I'm going to go through the S&P 500, but I'm also going to do 2004, current date, and 1984, because they do have changes every year, so it's easier to find each year and what was in it. So currently what we have in the S&P, and I only did the top 20 stocks, except I did the top 21 for 1984 just because 21 stuff struck me. But so currently it's Apple, Microsoft, Nvidia, both Googles, GOOG, then GOOGL, Amazon, Meta, Berkshire Hathaway, Eli Lilly, Tesla, Broadcom, Walmart, JP Morgan, United Health, Visa, ExxonMobil, MasterCard, Procter & Gamble, Johnson & Johnson, and Oracle. I don't think any of that comes as any big surprise. Now, if we go back only 20 years, which, at least to me, doesn't seem that long ago when I really think about it. 2004, I know what I was doing and where I was and where I lived and things like that that make it seem not that long ago. It's amazing that Apple and Microsoft and Nvidia, like, they didn't even really exist back then in some ways. Like, Microsoft did, but they were just in their infancy, and it was only 20 years ago. But the 20 stocks back then were Walmart, ExxonMobil, GM, Ford, GE, Chevron, ConocoPhillips, Citibank, IBM, AIG, Hewlett Packard, Visa, Home Depot, Berkshire Hathaway, MO, the Altria Group, McKesson, Cardinal Health, State Farm, Kroger, and Fannie Mae. So pretty interesting that only 20 years ago, how different the top 20 stocks in the S&P 500 were versus today, and how many of them have really aren't even there anymore in terms of that, top companies. And I don't mean they've just fallen out, but some of them have legitimately fallen out. And this is only over 20 years. And you see how tech heavy we've become in just the past few years. And then if you go back to 1984, I think you'll see how heavy we were in another sector that, has completely changed. And a lot of these companies exist, but it's changed who the top companies are. Now, number one is ExxonMobil, which is still a force today. GM, Mobil, Ford, IBM, Texaco, DuPont, Amoco, Chevron, Gulf Oil, Atlantic Richfield, Shell Oil, Occidental, Marathon, ConocoPhillips, Sunoco, United Technology, Tenica Auto, ITT Industries, and Chrysler. So almost everything was in cars and oil and gas and everything else. And a lot of those companies have done fine. A lot of them are still exist, and they probably merged or split or however they've done over the past 40 years. But it's really interesting, at least in my brain, how it was super focused in oil and gas and automobiles. Whereas today it's super focused on technology companies. Now that is a long time horizon, that's 40 years. And like I said, a lot of these companies have done quite well over those 40 years. And my guess is you've been invested in only those and set it and forget it and didn't really pay attention, you probably did okay. So maybe in the Amazons and the Googles and everything else over the next 40 years, you still do okay, especially because it seems like the technology field is kind of in its infancy, since as hyper-focused as we are, that's only happened in the past, 15 years, let's say. So maybe it does have a longer shelf life to be able to continue. I also think that the AI stuff is all legitimate. It's way above my head, so I don't want to go into it in too depth because you can fantasize about any of it. But I think we're in this kind of renaissance phase where we are going to see the world change an awful lot. I don't know what that means for the profits of the companies that are utilizing it, or if they end up just spending a lot to try to get there before anybody else. And once it's usable, that anybody has access and they're able to grow as well. Or does it create a new scenario where the biggest companies really do just become bigger and bigger and bigger and slowly eat up the others? We talked about a little bit the monopoly laws last time, and again, I think they're getting misused in a lot of ways because some of the bigger companies right now are able to make prices to the consumers less expensive because they become so big. The whole concept of the monopoly laws is so that people couldn't take advantage of the consumer and overcharge because they just dominated that space. I don't really see that the case today. I think a company like Amazon, who still has competitors in Walmart and Target, but while they're able to dominate the field, I think they're able to actually just drive prices lower by becoming bigger. I don't know that that's wonderful in terms of employees and being stuck with working for less and less companies because the small business is important. But I do think breaking up Google simply for the fact that they're becoming big is kind of silly, and especially at a time where they are getting new competitors. So to break them up because they have a huge monopoly on search and think that that's going to improve things when you now have chat gpt and others coming into the space where it actually may change the industry, where they don't even have a dominant force anymore. Now maybe they do, but it's really weird timing to feel the need to actually break them up. And from my standpoint, it's only for the fact that they're big. It's not really because they're a worse thing for the consumer. Even the things that they point to that they have dominance in and that they're able to get the consumer to push to be using their product, I don't really see it the negative way that the government does. Makes no difference to me. I don't really have skin in the game. Whatever happens, happens. And it's not that I have some love for Google. I just think these monopoly laws are getting kind of silly as to how they're being used, especially if we want to compete on a global scale. If you want our companies to be able to grow and compete against companies in China and other nations to be the best of the best, I think you have to allow them to become bigger. Now, as you all know, the markets haven't been behaving the way we typically like. They've been having a bit of a rough few days and a rough week and a half or so. With the Fed meeting coming up soon and Friday's big job report that, you know, didn't have a huge reaction, but the market still sold off. The conversations that I had with friends and what I was talking about with my brother is it didn't really matter to me which way the news came out for the report. I felt like if the market rallied off of it, there was enough selling pressure that it would probably sell off by the end of the day. But I also had concerns that if it sold off on the number, that it probably had follow through to the downside. Don't know why, it's just my feeling about the markets that I just feel like they're what I would call heavy right now. I feel like there's room for them to continue to sell off. I think that people are over invested in the things like the Magnificent Seven, myself included, so I don't want it heard the wrong way, but I see this rotation going on to the things that have been undervalued for a long time from the things that possibly are a little bit overvalued. I think that these are still great companies, and as I said earlier in the video, like Amazon is probably my favorite stock. At the same time, we have to be realistic about the values of where they are and what people might be paying for them. Costco for me, I've talked about it a few times, is really difficult. One of my favorite stocks. I think it's a great company. I really want to own it, but I don't. And the reason I don't own Costco is it just doesn't make sense to me at the valuation it's currently at. In my personal opinion, it is so overvalued for the industry that it's in. I just can't stomach paying what it would cost. I did buy a little not that long ago, and then I just couldn't stomach it. I actually just made a little bit of money and got out because I keep thinking about trading over 50 times current earnings for a company that grows at, 7, maybe 8%. It just doesn't make sense in terms of valuation. And that's a hopeful growth for a company in basically the grocery store business. Now, I know they sell other things, but their margins are so small. The only way that I see real growth is I know that they raise their membership fee, but if they start opening more locations, and I don't know what point they cannibalize their own business, but I do think there's room for growth because there aren't that many of them currently. But they're pretty good at their job, and I'm guessing that if they thought they could expand the way that I think they can, they probably would be because they're in the position to. Anyway, it's very hard for me to buy Costco where it currently is. I feel the same way about Tesla, that I love the company and I think they're going to continue to grow. And in some ways, I think they're a better investment. I think Google and Meta seem really reasonably priced for their earnings and their growth rate that's been expected for the next few years. I don't know in terms of Google because there is a little bit of that cloud of the Department of Justice coming after them. But I do think that even if they lose and have to be split up, that actually releases a lot of equity in those companies. So I think Google's a bargain right now. I wouldn't be diving into it. But Apple, I almost feel the same way about at Costco. And I actually lightened up a position that I put on not that long ago, which I didn't intend to do. But I think that they're getting overhyped with their next phone that's coming out. And what I really think is they may not have the demand that the market's expecting on it. Maybe they do. Maybe I'm wrong on it. And I think Apple does have a vision the same way that I feel like with Meta with the Vision Quest and the Oculus. And maybe they never become what they hope it becomes, but at least they're investing in some sort of future technology to try to grow their companies. Part of why I think that rotation is going to continue, though, is I think the information about the Fed and what they're going to do is accurate on one level. I don't think they're going to rush, and maybe they do. Maybe they cut rates quicker than I expect, but I don't think they're going to be in any hurry because I think the economy is still doing okay. And if they move along slowly, it gives them room to be able to move quickly in the future if we start having problems. So I expect the Fed to cut a quarter, but maybe I'm wrong. Like I said, I'm wrong a lot of the time, and I'm okay with that. And I expect them to continue to cut. I think the markets are ahead of themselves where the bonds have the rates already. But I do think over the long run, they're going to be correct, and we're going to see lower borrowing costs. Now, in the beginning, that's just going to impact these multi-billion-dollar companies that are borrowing overnight, literally from the Fed, because even a quarter point when you're JP Morgan or others that use that overnight lending window, it's probably an awful lot of money that that quarter is going to save. But to you and I, it's really not going to make a difference. But over the next year or two, is they're likely to cut maybe 200 basis points, which is 2 full %, you'll see mortgage rates come down. You'll see borrowing for cars come down. You'll probably see the credit card rates come down. And that starts to impact you and I and our ability to borrow. And it also will come down in money markets and CDs and things like that. So there's an awful lot of money in these guaranteed return type of investments. I think as the rates come down on those items, the people who are currently getting 5%, and then when it rolls and they're only getting 4 or possibly 3% return on these guaranteed investments, are going to start looking to get yield somewhere else. Where is that somewhere else? Typically the stock market, typically dividend stocks, and I think that's where they're going to start to look, and that's why you're seeing these companies already begin to move in price. There's really no other reason for a company like Altria to be pushing all-time highs and continuing to get more expensive other than they pay a really good dividend and the dividend's safe, and as the payments on money market accounts drop, that's a likely place that somebody might look to put their money to get the same type of dividend. Now, it won't be paying a 9 or 10% dividend by the time they notice that their money market has dropped from 5% to 3%. Maybe it's only getting a 6 or 7% return where it's already begun to move to. Same with things like Verizon. And you guys, I think I like Pfizer for the same reason. I think that dividend check is probably pretty safe, and they'll continue to develop medicine and continue to make sales, and getting a 6% return and something that could increase in revenue and could go up in valuation, to me is a better bet that I would like to make than knowing that I'm going to get a lower return in a guaranteed account. So I think a lot of the new money going into the stock market is going to be looking to get the yields that they were getting somewhere else so that they can rely on the increase in whether that's payments and they think of it as a monthly payment, which is kind of how I think of it, or just money that comes out that gets paid to the investors. I see that as likely, where they may not be investing in a company like Amazon. Now, I don't see gloom and doom. I don't see Amazon having some monstrous crash. I'm not super nervous about too much of it, other than I'll discuss real estate a bit. But I do think that you could see things like Meta range trade for a while until the earnings make more sense, where they actually are growing fast enough to grow those ratios and push the stock higher. Same with Amazon, same with Google, and all the others. So if it's overpriced now, it really could take a lot longer to siphon out where the price and valuation should be, as the new money coming into the markets really might be looking to get yield and growth and stability. Now, one area I really like that doesn't give a whole lot of yield is I do like a lot of the energy companies, and I mean the ones that actually sell you energy, because I think between those chips and electric vehicles, that their earnings are actually going to increase pretty well. They should be able to go up in value because there'll be a big demand for electricity in some form or another. So a NextEra Energy or a Duke or even a Con Edison, even though I think of them as like this big mess in New York, I think there could be opportunity for them to actually outperform. And those big, boring, like the companies that I think of as like the my grandma who wanted to own the utilities could be a really big surprise over the next 5 to 10 years. And then with my near and dear and probably one of my favorite markets is the real estate market and what's going on and what I find so interesting. Things don't seem to be picking up a whole lot now that rates have come down. I don't even think that people really notice how much the mortgage rates have come down. We pushed above an 8% mortgage not that long ago, and I would guess that we're running in the mid sixes, possibly even the low sixes already. And I don't see a ton of buyers coming back into the market. Now, when I look locally, I still argue that Las Vegas has really changed and we're transformed into a destination place, and other destination places that COVID brought out are going to continue to be well valued. I moved here in 2005 because I thought it was underpriced. Now I think, if anything, we're a little on the high end, but I think for good reason, which is we have tons of people moving from California. You save on state taxes, and then you add to it, we have professional sports teams now, the F1, the Sphere. We potentially have a Hollywood Studios, which I think would drive even prices higher. But if you start looking nationally, where inventory is becoming to come back to the market, and if you look specifically to somewhere like Florida or Texas, where they had an over drive to those markets, one, because industry was moving into Texas, but with Florida, just same reason as Las Vegas, it's a great destination. But now with Florida, you're having HOA problems as well as the insurance prices and a few other things going on that specifically are targeting them that are pushing a lot of inventory back to the market. Well, I think Vegas sustains itself kind of how I talk about Amazon and Google and Meta. Maybe we range trade for a little while until the prices make more sense in terms of where things have to balance out with the interest rates and monthly payment to calculate where things will be comfortable for people, because they are expensive right now. I don't know if that means prices come down in places like Las Vegas or places that are high demand. You go out to Hawaii, there's always so much demand that no matter what goes on, they never seem to really have a crash. Anytime there might be, it seems like buyers come in just because they want to own there. Beginning to feel that way about Las Vegas, that we're one of those places that's quickly becoming a place that people want to be. So you just don't see a ton of inventory come to the market, which is what you need to really see a crash. And unless we see inflation start rearing its ugly head, which I don't really see happening when the Fed starts to cut rates, but unless we actually see inflation start coming around again, well, I think the continued path for prices is higher while rates continue to come down. I guess we'll see as it plays out. Now, the one trade I'm kind of anxious to put on, and I'll probably make some phone calls on Monday to see if I can figure a way. I think the dollar is going to continue to get weaker against a lot of Asian currencies. Um, I'd like to put on a position in the Thai baht and the Malaysian ringgit, and I actually already have a Japanese yen position that I've added on to, but I'd like to be spread out across a bunch of them, because No matter who wins the election, it sounds like they both want to spend more and cut taxes more. And I think the more that we spend, simply the weaker the dollar is going to become over the next few years. It's created this time frame where we're traveling all across different countries because the prices are attractive because the dollar is so strong. I've seen that a few times in my life, even since I was like 10, 11, 12. And what I've noticed is that lasts 3 or 4 years before the currency prices reverse. And then they seem to reverse for a long time, very slowly, until it goes the other way and we start seeing people visiting from other countries because their currency becomes so strong. I think we saw that opportunity and that timeline in the past few years have been attracted to visit other countries because the dollar is so strong. Now, I started buying the yen 2 years ago, and I've been very wrong for a little while. And the reality is, percentage wise, not very wrong. I transitioned out of having a futures contract into actually having the physical, the yen, because I wanted to actually put the money out so that the move in the market didn't impact me and I didn't worry about it. Because if you actually put out the dollars, it doesn't move very much very far. It really is slow and it's not a huge fluctuation. Now, I added on because I think we finally reached the real pivot point. I think when that yen carry trade started, it was really the beginning of the reverse of the markets. And I think you're going to see the same, especially in the ones that are the least value, something like the Vietnamese dong. Like these countries are really coming up to speed and getting caught up with us. If you go to visit, it's a pretty interesting place, all of them. We went to a few, so I was really fortunate, where you can see old world and where things used to be, but you also see a lot of new as well. And the transition is like happening in front of your face. And as they get fancier and more technologically advanced, I think the currencies are going to go the same way. You're just not going to get brand new with all the top features and everything else type of apartment or condo for a quarter of the price simply because our currency is so strong. It's hard for me to envision that not changing. And the locals still have to be able to somewhat afford it. So I don't think you're just going to see prices quadruple in a short amount of time and then have massive inflation like they used to. I think they used to have it because they were still so far behind. The fact that they're getting caught up now, I think what you're going to see is a little bit of both. You're going to see prices go up, but more importantly, if the dollar gets weaker for our costs so that it makes more sense, you'll have an ability where the locals just see their prices maybe go up 10% or so a year. But when you add the currency change into it for places like the US, where the dollar's so strong, and maybe even somewhere like London that'll probably weaken against the dollar, but not against these other currencies, you're going to see the prices for foreign investors probably change, where you don't get so much for your money in these places. The world is becoming more global and it's becoming easier and easier to work remotely and online. And as that continues, like, I don't mean it the wrong way. Why wouldn't you live in a city like Kuala Lumpur if you're still able to get an apartment that's 2,000 square feet, 3 bedroom in the greatest part of the city for $1,000 a month or maybe 1,200, where in ringgits that adds up to a good amount. So you're paying 5,000 ringgits, which, they think of it the same way we think of dollars. My guess is maybe that moves up to 6,000, but the dollars are not getting, now it's costing you $3,000 a month, which to us is, pretty standard for that size apartment in a nice city. In fact, it's even a little cheap in comparison to places like LA or San Francisco by far, or New York. It's hard for me not to see that happening, and it's not going to happen overnight because currencies just don't move like that. But I see a gradual change where these countries get more advanced, so there's no reason for their currency to be so weak against the dollar, because an hour's labor is still an hour's labor, and they're going to demand more as their prices go up and things cost more. I also envision that it'll be harder and harder to retire abroad for people on fixed income for that exact reason. So if you're watching all these videos like I do about move to Vietnam, move to, you know, Cambodia and Philippines and Malaysia and whatever else, because oh my God, you can live on such little money. As that currency changes over the next 10 or 20 years, if it does, if you're living on a fixed income and they're having a little bit of inflation, it could be really difficult to survive on that monthly income. Now, if you have enough assets and you've been able to buy property in those places, and you're ahead of the game, and that I'm right on the currency change, well, you may be in a phenomenal position where you're able to grow your currencies there and grow your assets in those countries as that stuff all transitions. But if you're really going there on Social Security and you're fortunate enough to live the next 20 years, I think things could really change as to what you're able to afford on those checks. And it could make life over there really difficult. So please have a backup plan if those are the things you're looking at. I say that because I look at it. I have this fantasy. I even talked to my family about maybe we do ninth grade in Japan next year because my son loves Japan. And to me, that's an avenue to have, one foot out there and be able to look around to see if we could find something where we're happy in some of the less expensive countries. I don't think it's a reality. I think I just like to fantasize, and I really don't picture myself moving anywhere because we have a really nice life where we are. But my point is, if that's what you're doing, please have a backup plan. Please be prepared that currency fluctuations are real and they happen slow and gradually. So you could get caught off guard over a long period of time. Things that might be really inexpensive now may change only a little bit in what they seem to cost, but if you're getting a lot less of those currencies of wherever you are than you were a few years back, it could make it a lot harder to afford the lifestyle you think you can. Anyway, I hope you liked the video. Again, if you could do me a favor, if you haven't already, hit the subscribe button. It really does help the channel. Hit the like button, hit some comments. Tell me what you're thinking about moving across the world. Let me know what you think about just owning the SPYs and the QQQs. What do you think the Fed's going to do at the meeting that's coming up? All these things are super interesting. And do you think we have a huge stock market collapse or housing collapse coming? Or like me, do you think that we're just going to float along and continue and it's going to sound scary and we're going to continue to climb a wall of worry? So have a great week. I'll probably do some shorts. I hope to do a video in the middle of the week. I know I've just gone to one a week. I hope it's okay, and I hope you guys are enjoying it.